Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, for the start of this week, it has been very volatile. And with the Australian dollar staging a whipsaw price action, the market plummeted to a low of 63 cents after rejecting the level on Friday of 66.45. Nevertheless, with all the any longs that were posted were blown away as the market balls threw the towel in and ran for the exit door. From a technical outlook, reassessing the market from where we are at the moment is I still believe that we are looking close to the bottom side of the range, around 63 to 64 cents, where the broader picture is still holding to 60 cents. With the markets falling away in whipsaw price action, it is a little bit on the safeguard to keep your stop losses accordingly to your risk management in case this price action continues due to the high trading risk that we are in the moment of the global market conditions, and therefore could see these wide swings to continue. The Euro's continued on a weekly outlook, and as you can see, now hits a fresh high around 115. It is assessed though that the market may take another test towards its top side due to the fact, the given indication of the whipsaw price action and also the weaker US dollar. After Friday, the US economy posted even better numbers of 273,000 jobs in February, beating the expectation of 175, with the unemployment rate dropping down to 3.5%. Still, the market continues to shrug off those numbers, and the US dollar remains weak in terms of the euro. Now, looking at this level of 115, 10-20 level is major. If we get a break above there, then it could give an extension to 115.80. Looking at the monthly chart, you can see dollar yen has collapsed and taken out the level of I was called in not so long ago of last week of 104.45 and reaches a fresh intraday low of 101.55. From the plummet, as you can see on the dailies, the fact is the market still remains quite negative as traders rush to safe haven demand. And that includes not only just Japanese yen, but also gold. At present, for dollar yen, I don't have a view due to the extreme swings that we're seeing here at the moment. But I can say that from a monthly outlook, is that the level of 101 figure 45 and also beneath that at 100 are major levels. But from a technical point, still remains quite heavy. So let's see how it plays into London. Sterling, since the inverted hammer, the market's taken 5 steps to the upside, but rejects it round with the highs this morning of 131.22. From that rejection, could see a possible pullback, but let's see how the market plays because I'm still going to hold a neutral stance due to the uncertainty of this market. With oil dropping a whopping 30%, has taken me out of my dollar CAD view, so I'd rather be neutral at the moment and see how it plays into London. Gold surges to a fresh high after clearing 1,698 to 1,703. Resistance is seen around 1,704 to 12. Do be careful when you're trading gold because the swings are really going to be quite aggressive and quite brutal. I don't see any support at the moment, so around to the lower region of around 48 to 56. But you can see here the swings are getting very big. It's going to make it very difficult to trade in the near term. Finishing up with oil, well, the market, as I said, plummeted from $41 to now the fresh low of $27.70. It is assessed that from this price action and looking at the broader picture, you can see that the support going back to around the 2015-2016 lows of $27, 40.80 is rather major. But I don't have a view here. I'd rather sit out for the moment because the markets are just too volatile and the swings are just too great. It makes it very difficult to trade, so just be on your guard. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.